All right, thank you for staying with Daybreak. Let's start off that discussion whether Kenya has pressed the reset button now that President Samia Suluhu is here. Just about 2 months since she was sworn in. She was in Uganda first, then came here. Let me introduce my guest really quick. Phyllis Wakiaga, she's the Kenya Association of Manufacturers CEO, is here with me. Thank you for making time. And Mike Masharia, CEO KAHC, and also a board member of the East African Tourism Board. Thank you so much for making time, Mike. Phyllis, I'll start with you. Do you see this as Kenya and Tanzania pressing the reset button when it comes to trade relations?
Thank you, Trevor. I think I see it as Kenya and Tanzania pressing the reset button.
Yeah.
The headlines are talking about that. You saw the positive reception that Her Excellency received when she arrived yesterday. And out of the reports, it appears that they have had discussions about the trade and non-tariff barriers that we've been having. And the commitment from the president is that these are issues that are going to be addressed. So for us, it's important because Kenya and Tanzania, historically, we've had strong bilateral ties. We have a lot of socio-cultural ties as two nations. And in the past, we have traded well, quite well. But over the last few years, the reality is there have been a number of non-tariff barriers. We've had challenges even around work permits and other issues. So it's a good thing to get a commitment from the top and a political commitment that these issues are going to be addressed. I think it's for the good of the East African community and all of us if we're able to trade more between each other.
Yeah. Mike, how significant is this visit?
It's Trevor, very, very, very significant. The president yesterday mentioned renew, the word that he used. He was speaking in Swahili, but he said the word renew in English. And that signified a lot because, you know, relationships between Kenya and Tanzania, particularly when it comes to trade, and in particular tourism, where we share a lot, have not been very good over the last maybe 5 to 10 years. Yeah. So this renewal is something that we are looking forward to because there is a lot of cross-border and intra tourism that we can take advantage of for both countries.
All right.
Yeah.
Phyllis, was it an issue of personality-driven politics or was it policy issues between Kenya and Tanzania?
From where we sit, it appeared to eventually border on policy issues because a lot of the issues we're facing were relating to non-tariff barriers. So it would be either a new regulation has been put in place or a new policy. So that would then mean that it is something that is happening from a policy angle. So I think the new president, Her Excellency Suluhu, is probably relooking at how to reshape her policy in terms of trade, in terms of foreign policy, the EAC region, because she probably sees the strategic importance of the trade and investment relationships and also the other relationships we have as countries. So that's what I see, that there's a policy shift happening where we are getting commitment for these issues to be addressed so that going forward we have less impediments to trade. If you looked at the statistics, there was actually a bit of a decline in terms of the Kenya stock held in Tanzania over the last few years. We also saw the trade from Kenya to Tanzania go down, but the trade from Tanzania to Kenya increase, which is a good thing because as a region, we want all trading partners to be able to grow their trade, to grow their investment and their sectors. But what we do on the other side is that we leave a lot on the table because if we are not trading adequately between each other, the reality is people are still going to consume goods and products. They will come from somewhere. So what has happened is the gaps in the market have been sealed by other trading partners, a lot of them maybe China, India, yet we have the ability to do more within the region. Yeah. So I'm happy about this policy shift that is coming from the leadership of the president because it's for the good of the community.
Yeah. Yeah. Mike, is it possible to galvanize this relationship beyond the policy and remove it also from personality-driven politics? Because some people say that our word is as good as the paper it's on. The issue here is not really so much the deals we have. It's more about personality-driven issues, whereby if there's a misunderstanding at the border, the other country retaliates immediately, and our truck drivers are stuck there.
I don't really think it has a lot to do with personality, because the trade problem with Tanzania historically it started a long time ago. They did not start with the current president or the former president. Actually, you go back a few heads of state, And on the surface, it looked like, you know, the heads of state were very much in sync with one another. Even if you take the last three Tanzanian presidents against the last three Kenyan presidents, it looked like they were in sync. But when you're seated at the table now, you know, trying to figure out the technical issues, that's where you found that there was a lot of, you know, impediments in terms of policy. So I don't really think it's got to do with personality. Even though when you have the right attitude at the top, then things will change. But I don't think it's a personality driven. It was more of policy driven. So now that we have the two countries getting together and agreeing that from now on we will make it easy for one another, we will make it easy to trade with one another. It's a new attitude, and I think it's going to work. I'll give you an example. Since the 70s, we've always had, in tourism, we've had safaris between Kenya and Tanzania. In fact, they were branded Kenya-Tanzania safari for a very long time. And Tanzanian vehicles would come here, pick up customers from Jomo Kenyatta, and drive all the way back to Namanga through Arusha and continue. But then at some point, they stopped our vehicles from getting into, crossing over from Masai Mara to Serengeti. So therein began the problems. And those problems are not problems of 3-4 years ago. They are long-term problems. So we try to think that this would be the time to resolve those issues. Another simple issue, yellow fever. Wildebeest cross Masai Mara to Serengeti every year, they don't get yellow fever. But as a person, you cannot go, you cannot fly from Jomo Kenyatta into Dar es Salaam without a yellow fever certificate. So this is what Phyllis is talking about, the non-tariff barriers. We need to get rid of all of those and make it easier to go through those borders. Obviously with the normal border checks, but we need to encourage trade, not you know, not stifle it.
Yeah, the tourism sector has actually been affected by a lot by that. In fact, there were rumors sometimes that sometimes in certain places they would burn the grass so that there's no crossing of the wildebeest and all that. What is the lasting solution to this now that you're from the tourism industry? How can it be made so easy that it is almost a seamless trade rather than competition?
If you look at the border, just the border between Kenya and Tanzania, all the way from the beach inside up to Isebania, it's a very long border. So it means that there's a lot in common in terms of the natural environment and the ecosystem. Taking the beach, you know, from Shimoni, going upwards to Kiunga, up to the Somali border, almost 500, 600 kilometers of shared border. So if you take the communities that live along those areas, the Maasai, you don't even know whether Maasai is Kenyan or Tanzanian. When you go to the Kuria community, you have some people across the border and on this other side. So there's a lot of connection, both cultural and economic. So in terms of tourism, what would benefit us is to open some of the exit points within the long border, particularly Serengeti with Mara. In 2019, I think 2018 or 2019, Tanzania was, I think, one of the top 3 source markets for Kenya. As we were looking for, you know, numbers from Europe, we counted the population of East Africa and found that we could actually even command up to 600 to 700,000 if you combine the entire East Africa. But it's got to be a combination. So we formed what is known as the East Africa Tourism Platform in 2013. And this was the body that was responsible for, in collaboration with Trademark, that was responsible for the movement between Kenya, Uganda, and Rwanda by ID and the single visa, where we had also wanted Tanzania and Burundi to be part of it. So Tanzania and Burundi opted out for that time being. But when we launched in 2016, even without any marketing, we picked up $10 million for that year alone by just selling that single visa. You could see that the cross-border trade between Kenya and Uganda and Rwanda picked up. And we wanted to take advantage also of Tanzania, because obviously a higher population, closer in population as Kenya is, and we can harness the tourism numbers. In fact, if we do that, we might just need the external markets as a supplement.
No, that's interesting. Yes. Phyllis, is that your position as well from the manufacturing perspective?
Just to follow on what Mike is saying, for us then to address what we are calling the non-tariff barriers, there are some underlying policy issues also within the region that need to be fixed. Because if you look at some of the trade barriers between our two countries, some of them are like lack of preferential access into the market of certain goods, like our edible oil products, our cement products, our motor vehicles. And that is really based on, for some of them, like edible oils, the rules of origin, where the rule of origin will allow virgin oils made out of seed, but doesn't recognize some of the oils that need to be allowed into the market. So we've really been pushing for the rules of origin to be relooked at, because that's a big area that can help us address some of those trade impediments. The other NTBs arise from things like standards, where you'll find that there is no mutual recognition of a standard certificate sometimes issued in a partner state, and it happens in some cases. Yeah. So what we need then as a policy, really reality or change, is for the mutual recognition of certificates. We are under the process of harmonizing of standards within the region, but there's also the need to recognize if KEBS issues a certificate for a good, at the border, the understanding is that it should be recognized by any of the trading partners within the East African community. Yeah. Then the third thing is resolving the issue around the common external tariff. Since 2015, we have been in the process of renegotiating for an updated common external tariff, meaning that the tariff currently is a 3-band tariff, but because of the stage where we are in terms of industrialization, there's need for us to move to a 4-band tariff. And there are discussions on what the 4th band should be. There's an agreement on the first 3 bands, but further discussions. So this will also assist us to address a number of the challenges around stays of execution, because today, if you look at the East African Common External Tariff, which is basically the duties used by the East African community, every year when a budget speech is read across the region, there are more stays than the tariff. So the exceptions are more than the rules. So it really shows you that that tariff needs to be relooked at to enable us to trade better. And then the last issue would be around the issues of discrimination, because we have certain cases in partner states, between partner states, where there are discriminatory excise duties, where you'll find that they'll say, if this product is not manufactured from goods from country X, we will not allow it to come in at preferential rates. So those are some of the things. I think if we are able to address these things holistically, and the commitment from Her Excellency demonstrate that there is the goodwill at political level to fix these issues. So I think we need to move with speed, especially on the common external tariff review, because it's going to be a game changer for industrialization in the region.
Yeah, but you see, Phyllis, what I'm struggling with is, where do you draw the line between healthy competition and stifling local growth?
Yes.
Because there's also that. Yeah, in fact, there are some rumors that they say some Kenyans are a little bit too aggressive. So how do you, where do you draw the line when it comes to healthy competition and stifling local growth?
I think we draw the line with the reality that the market is big enough. We start with a mindset of abundance, not a mindset of scarcity. If you look at the trade within the East African community, we trade at maybe 10 to 14% amongst ourselves. We trade more with Uganda as a reality. We trade less with Tanzania, and then the other partner states. But it means then there's about 86% of the market that we have left for other parties. Yeah. So it means, how do we grow a bigger piece for all of us as East Africans? So it defeats the purpose when we think we are protecting our domestic, but we end up closing but allowing the rest of the world to trade with us. And I think for the region, it's strategically important for us to trade more with each other, because if you look at how we are interconnected, Mike has made reference to the interconnectivity in tourism. There's interconnectivity in manufacturing, value addition. We import raw materials from each other. So you have people who bring their moringa from Tanzania, who bring their maize from Tanzania, and process it locally. You have people who import certain raw materials from Kenya. So it really adds value in terms of growing local value chains when we are trading more amongst each other. And then from a bigger picture perspective, we have the Africa Continental Free Trade Area ahead of us, another huge opportunity. If we're able to solidify and grow the manufacturing base of the East African community, we also have Africa to take advantage of and to trade with. So for me, what we need is really to move from a mindset of scarcity to a mindset of abundance, and to take advantage of what the COVID-19 situation has taught us, that it is important to have your local supply chain strengthened. So that's something that we need to do. We need to start building industries in each other's country. Believe you me, the market is big enough for us to share. Okay,
we'll talk about the Africa Continental Free Trade Area in just a bit. But Mike, you made a very interesting reference point when you said that if we were to work together, we wouldn't even really need external tourism. But what is stopping that from happening? Just explain to us how that would actually work, because I think then therein comes in that same issue you're talking about in terms of competition. Then the tourists are here, they're here because they came to Kenya and not Tanzania, and how do we share this revenue? What would be the best way of doing this?
Starting, Trevor, with the local scene. The 5 countries, without taking South Sudan, the 5 East African states have a population of over 200 million. If you take 10% of that as the tourism client, you're talking about 20 million. So even if you divide the 20 million and take 10% for each country, you're already talking 2 million people rotating around East Africa. Our international arrivals in the best year was 1.2 million international tourists. That's combining all the countries of the world that people visit here. So it's a huge market. Contrary to popular belief, it is a big, big market, even for local manufacturing. So it's a market that cannot be ignored. And once you set the policies correct, which are the areas that you can address? Number one, address movement. Free movement of people. Once you address movement, the free movement of goods, I think we don't have that sorted out. Even when you remove the tariff barriers and the East Africa Customs Union Act, you still have policy barriers. So you still, if you have a truck full of produce, it maybe needs to be inspected, it maybe needs some paperwork and so on and so forth. So you remove that freedom. The number 3 freedom is a freedom of capital. So you could go and invest in Tanzania, for example, or invest here. Or if you want to build a factory, you can do it in Uganda or in Burundi. And the 4th one is the right to work within the community. You remember we've had so many issues of work permits in Tanzania, where Kenyans are appointed to very good positions in Tanzania, and they shift base, and then after 2 months they're told you don't have a work permit, yet they've already given up the job that they had over here. So you need to look at those 4 areas, those so-called 4 freedoms that would be achieved in a union like that. And I think that would be a good place to start. Then you can talk about the ACFTA. A charity begins at home. Once you have a solid market here, you're standing on solid ground, you can be able to expand out into the Africa region. When you talk about the international arrivals from other countries, it makes much more sense to sell the destination as one. Because we have diversity in product offering. I'll give you an example. Kilimanjaro is not in Kenya; it's in Tanzania. It's a good climb for any person who's interested in mountain climbing. We are told Mount Kenya is a harder climb, even though it's a lower mountain. So you could complement the products. Yeah. We don't have mountain gorillas in Kenya. You could go to Uganda in Bwindi or volcanoes in Rwanda to see mountain gorillas. If you want to go snorkeling or deep sea diving, you've got the beach between Kenya and Tanzania. Yeah. We have the lake. We have the northern part, which is a desert. Yeah. Dubai has made a lot of money on desert safaris, just driving on sand. So these are things that we can complement in terms of product. You can complement one tourism product with another. And let somebody make the trip. If you're making an 8-hour trip, from the US it's double the amount, so it's 16 to 24 hours. If you're making a 24-hour trip to come to a region, why not see everything that the region has to offer instead of going all the way back, then coming back after 5 years? So there's a lot that we can do together, and I mean, that $10 million in 2016 was just a visa fee. We have not even quantified how much money the people who bought those visas spent when they arrived in the region. So it's a win-win situation. In fact, we don't even need to be debating it. It's something that we should just do.
Why is it taking so long to implement?
It's something that we should just do. Because now those policy decisions, you have to dismantle each one by one by one. Some of them might require the input of the local parliament, maybe Kenyan parliament. Some of it might require the policymakers in Tanzania. But once you go there at the top and you agree, we are going to dismantle. Within about 3 to 5 years, we should be seeing a region that is thriving. With the cross-border, even food, just a simple commodity like food. Milk, you could do a lot within the region. So there's I don't know. Tell you the truth, I don't know what we are waiting for.
You don't know what's going on.
We just need to move.
Phyllis, somehow Tanzania still prefers Southern Africa as a trading partner rather than Kenya, who's their natural neighbor. Why do you think that is?
Tanzania are members of both the East African Community and SADC. So as a member of SADC, of course, they do have the possibility of also trading within the region in SADC. It's the same way Kenya is a member of EAC and COMESA, which Tanzania is not a member of. So it's really the common market, or the FTA, that a country has chosen to get into. And of course, Tanzania and South Africa have their own historical ties based on the struggle for independence and other things. So that's a reality about their relationship. And because they're on the southern side, they also trade more, also because of their geographical relation and where they're located. So it's something that is part of the reality. We're also members of COMESA, but it doesn't take away from the fact that as East African Community, we are actually a customs union. So it's more than just a free trade area, as both SADC and COMESA are. So the need to even strengthen it further and to solidify our ties and to take advantage of the opportunities that come from being a customs union is something that I think is beneficial to the United Republic of Tanzania as it is to Kenya. So that's I think important. But also, as we move to the AfCFTA, it will no longer matter whether it's SADC or EAC or COMESA. We'll really be looking then at Africa as a whole market and trying to trade within the whole African market. And these regional blocks or customs union are really the building blocks of the African continental free trade area. If trade is working within a smaller block like EAC, and we are sorting out the impediments and we are able to deal with NTBs and the technical barriers to trade, it means when we are now trading as a whole African region, it becomes easier for us to also address those issues, because at the REC level, the regional economic block levels, we are trading efficiently. So we should see it as something that is really a building block for us to be able to take full advantage of the African continental free trade area.
They're members of the SADC and we are part of COMESA, but on the rudimentary level, could it just simply be because of our unsustainable and insatiable tax regimes and even just corruption? Basically, we are just looking to almost fleece them. so to speak, for lack of a better word.
I don't think decisions to join trading blocs are based on corruption in neighboring countries. They are based on strategic interests, and a lot of them geographical location and the opportunities you see and your historical ties.
Yeah.
So I don't think when I join COMESA, I'll say my neighbor Uganda or my neighbor Tanzania. I'll be looking at my country has a need or an interest to access the markets within COMESA. I see strategic need in going to Zambia. I see strategic need in trading with Egypt. So it's a broader conversation because it's a trade policy conversation which is driven by other engines as opposed to the fact that someone could be having challenges in their own country. Okay. But of course, it's something that we need to look at, how we can strengthen the East African community, because it's stronger than our FTA. An FTA is a free trade area. You're able to trade together, which is great. But a customs union gives you that ability to set a common external tariff as a region. So that's why we have 0, 10, 25 currently as the duty rate for anyone who is trying to import into the 6 partner states. Anyone outside that has to pay the duty. But amongst us, we don't pay the duty. We trade at preferential rates, duty-free, as long as the goods meet the rules of origin criteria. So it's something that I think is stronger than a free trade area. So we should take advantage and strengthen that relationship within the EAC even more.
Okay. Yeah. All right, let me take a quick break here. Mike, I'll come back with you and find out whether you think also the EAC community is stronger than the after one. But we'll speak about that in just a bit. Taking a quick break. When we come back, Dennis Etienne is at the Serena Hotel where there's a meeting there. We'll find out what's going on. As we speak, President Samia Suluhu, the president for Tanzania, is still here for a 2-day state visit. Started yesterday, it's continuing today. I believe she's meeting business leaders later on today to try and galvanize more trade ties and more trade deals between Kenya and Tanzania. We'd like to hear your views. I see some of them already here. I'll read some of them when we come back from the break. At Trevor Mbija, Citizen TV Kenya is the hashtag Daybreak. See you in a bit.